I put the straitjacket on today because I was going to do a video where I'm just going to go ranting and raving and absolutely out of my mind. And then I remembered somebody said something to me one time. Will they take you serious, Krull, if they really truly think you're insane? You don't know. You don't know who the first person that's watching you today. You're going to scare people away, even if you're making sense. Okay. So off comes the straitjacket, right? Hang for a second. Good morning, everybody. Let's talk sense about the stock market right now. What we've witnessed over the first 3 months of the market was an extraordinary event constructed by the government and Obama and the powers that be to make the market go up. Coupled with the fact that it was possibly a short squeeze and the idea that the interest rates are so low that there was nowhere else to put your money, that the market had to go up. Then a little bit of performance chasing, as well as the enormity of the Apple move, carried the entire market up for the month of January, February, March, and into April. Partially the market driven by earnings, partially because the interest rates are so low, but most importantly, the idea that people were missing the boat. Now, as the market was going up, it was one of the most hated rallies going into April. It seemed like most people had missed the boat anyway. A market rally that was unbelievable, one for the record books. Now, here we are. I got caught short sometime in the month of March, and I proceeded to beat myself up and cry about it and took a loss, but then the market actually went up a little bit further after I got out, making myself feel at least okay. Knowing in the back of my mind that eventually, because each time I take a big loss on a position, which a lot of you can sympathize with this plight, once you take that loss, generally the trade will then go your way eventually. The idea of the market could stay irrational longer than you can stay solvent. There's a reason for this saying, because it is true. So at the point of pain, where the market knew I cannot stay short the Qs anymore, that's when we started to roll over. Now, the clear indication was at 68.50 on the QQQ. If you take a look at your chart, chickapliha, if we had chart capabilities right now, you'd see a chart in front of you, but I'm sure everybody out there has their own charts. So sometime there in April, coinciding with what we talked about with the stock called HEAT, H-E-A-T. Now, we explained something how charting is one thing and fundamental analysis is another, but the most important thing in a market like we have in this day and age is sentiment analysis and seasonality. I'll get to that in a second. But sentiment analysis. We're talking about a stock called HEAT right now. If you pull up the chart, you'll take a look at the stock, H-E-A-T. This is what I call the shittiest stock on the planet. Ooh, did I just ruin my professional image by using a naughty word? Shut up. So, coinciding with the HEAT monumental move from $2 to close to $10 was the indication that the end of days had arrived. When the worst stock that you could think of, the most measly, awful, manipulated, reverse stocky split that you could find, starts to go up 100, 200, 500%. Generally, they have nothing left to run, and the only thing left to go up are sub-penny stocks. And I'm sure there was a whole bunch of those moving up at the same time. So, of course, this is hindsight, but again, we did allude to the fact that what we were seeing at the time. Let's pull back, because I am no genius, okay? I had covered the Qs at 66, and I was taking a beat down because I was shorting it. My cost average was about 62.5, got absolutely smoked. I had $400 contracts at 66 in March. I bought another 400 and then another 200. So collectively at one point I had 1,000 in the money puts on the Qs and 8,000 shares of the Qs short. Collectively took it right in the bum. See that? How I could use other words than the naughty ones? I took it in the bum. Is that better for you? So after a month of churning and burning, yes, we saw what we saw at about 67.50. When the market looked like it had found some support and rallied up to the idea of May 1st. Now, here we are entering May, And there's another saying called sell in May and go away. Now we're all waiting for this sell-off, all wondering when it's going to happen. The market, being the monster that it was for January, February, March, and April, could actually use a well-deserved break and a correction. Everybody anticipated, everybody wondered when it was going to happen. The funny thing is, now that we're in the middle of it, everybody's in a mad panic. Everybody can't understand what's going on. Everybody's confused. I myself will tell a little bit of a story about the last 4 stocks that I was involved in, which have absolutely confused and confounded me to the point of not even knowing what the hell I'm going to do today. So, let's continue. Sentiment and seasonality. So the sentiment changed on a dime. That's the greatest part, and that's why charts work for a little bit. Charts work generally when the market's going up, where everyone's a genius. Everyone's a genius when everything's working out, because when a stock breaks the high of the day and it goes higher, gee, you're really smart. When you could just look at a chart and say, if it breaks yesterday's high, it should go higher. And when it does, you pat yourself on the back thinking that you're a genius. Way to go, babe. Way to go, sir. You're the man. But then when the market starts to come in, where are you? You're buying on the pullbacks, right? You're buying on the dips. Your brain doesn't compute anything else because that's the way you've been programmed. You're buying on the dips and you're getting crushed. You're buying on the dips. You're wondering what's going on. Let me talk to you a little bit about what we just witnessed in a stock called WLT now. WLT, 2 weeks ago, I think today, came out with earnings. And of course, we have programmed ourselves not to trade options going into the report. Because if you're guessing which direction the stock's going to go, generally you're going to be wrong. And even if you're right, you're paying a lot of money for these option premiums because of the volatility built in, because the earnings report is coming out in the next day or so. You're learning a lot here today, right? You're learning a lot. Think about it. You have. You just learned 4 things already. Options. Anyway, let's pull back again. So for the WLT, we had some $65 calls, and the stock was blasting off on what looked like an earnings miss. You gotta love it. When the headline reads something negative and the stock's going higher, you gotta feel really good about yourself. So there I was, making money on the call side. So what did I do? I decided to short the stock at a point where it looked like it was gonna roll over. I was shorting against the calls, pretty much locking myself into the profit, which would have been the worst case scenario. Best case scenario is what I attempted to do next. The market started to come in, the stock started to fall, and I decided to sell and take the profit on the calls, therefore making me 100% completely short the WLT, and it started to fall with the market, feeling really good about myself, how well I just traded this stock in and out, short and long. I am a professional trader. But then, suddenly, it squeezes up $1.50, $1.50 right in my face, out of nowhere. I got stopped out. I took a $500 profit and turned it into a $500 loss. Way to go, fella. So, at that point, the price of the stock was $68.25. $68.25. Now, as a professional, I would have actually sold my soul to the devil. I mean, let's take a step back from the idea of, well, now that I covered my short for a loss, chances are it's going to go down. Yeah, that's one way of looking at it, but let's look rationally, as if the entire market doesn't revolve around me, which it does. Shut up. 68.25 I'm covering. Next thing you know, it goes right back down to 67. I'm already upset about this name, WLT. And here's a stock that looks like it's about to blast off to 75. But suddenly, sentiment has changed. And you're probably experiencing the same thing in another bunch of names. How about MCP? Did you believe in that? So anyway, the WLT proceeds to fall. Then not only does it fall, but it falls some more. And then breaking 62, you're thinking, really, is it going to go down this low? Now here's the situation with when a stock starts to go down. When you've missed that first 6 or 7 points from the top, you're thinking you missed the boat. Just like a stock runs away from you, you don't want to chase it. At the same time, you don't want to chase a short, because then if you're wrong about it, not only are you going to lose money on the trade, but then theoretically you can be really wrong, and now you're trapped in a stock that you just thought was going higher. Now you're short the stock, doubly making it a nightmare on your end. And I think you know where the story's going. Boom, bang, bing. The stock hit 54 and change yesterday. I would have been so lit up, so destroyed, so absolutely hammered in this name if I just hadn't been at least a little bit disciplined and realized to stay away, because I dipped my toe into it once or twice on the way down trying to buy those dips. And the funny thing is, because of the sentimentality of my brain and the buying on dip mentality, I was blinded by the fact that this stock was breaking down. Of course, eventually it did hit me over the head when it broke 60. I was like, okay, I guess we're going back to 55. And luckily I was out of the stock. But from 68 and a quarter to $54, that pretty much is a microcosm of what we just witnessed in this market. Feeling great about Apple, you're getting back into the Apple, looks like it's going to make a turn to go back to glory days. Next thing you know, it falls 100 points. Priceline down 100 points. Oh, you're feeling good about AIG? No, you're not feeling good about AIG. How about some MCP? Nope, that doesn't look good either. Hey, I'm thinking this US Steel might break 32 and a half. Oh, no, now it's at 22. So here's the problem with the market right now. If you've made it this far in this video, which you might not have, you can't go short because you feel like you might get squeezed, and you can't go long because you think you might too early into this move to play the bounce now. So you're trapped in limbo. When you're trapped in limbo, the market generally will go down more. When you're afraid to buy, what happens? The market continues to go up. Are you afraid to short right now? Personally, yes, I am. Even though I think the market has another 2 or 3% to fall at this point, can't do it, not gonna do it, rather sit it out. That's what my plan is. And you know what? When Apple hits 420, I'm back in. When Priceline's at 300, I'm back in. If Google hits $4, I'll be back in. And when Zynga is a penny stock at 12 cents, maybe I'll start trading that again also.
There he goes again with all those exaggerations. Does he really think Apple's gonna go to 420, or is he just saying that? Is he just? I mean, he makes sense. Then he goes off on a tangent with these crazy price predictions. I mean, what are we supposed to think? I don't know. I don't know what we're supposed to think. I don't know.